This is your host, Stephen Sargent, back at the Around the Coin podcast. We are lucky to have Brandi Reynolds. She's the Chief Growth Officer and also the Senior Managing Director at Bates Group. We talk all about US crypto compliance policy, regulation. We talk about her early days working in the traditional financial sector and what's changed in crypto from 2016 all the way up to today, where the momentum is just going absolutely crazy for digital assets, especially in the US. We talk CBDCs, we talk stablecoins. This is one of the best podcasts to listen to when we talk about crypto policy and regulation, and I hope you enjoy it. This is your host, Stephen Sargent, Around the Coin podcast. We have a special person today because they know crypto extremely well. They also know compliance extremely well, and they fly planes for fun. I don't think you can get a better guest than that. She's the Chief Growth Officer and the Senior Managing Director at Bates Group, Brandi Reynolds. Welcome to the show.
Thank you. It's a pleasure to be here.
I would love to start off with your background. We left some notes here. I was going to ask you some questions about your background, but then you made something that caught my attention, that you started off in the subprime space with specifically with payday lenders. I don't know if many people know my past. I did collections for 12 years. We collected mostly from payday loan companies, furniture payday as you go companies, 1-900 numbers. So I know the underbellies of collections and payday loans. So I'd love to know where you were in that space, especially when subprime has like a tinge of that still hurts people when they hear that word, when it's tied towards things like mortgages.
Yeah, it's funny because, it's still such a bad word in the industry, right? It's like, oh, we work for a payday lender. That's horrible. But no, actually, I spent over 11 years in-house compliance officer at Advance America. So now Purpose Financial. And it was honestly a great company to work for. The only reason I left was because there's no more opportunities in the space. But I mean, they did fantastic with setting the stage, trying to get good regulations. And I learned a lot from that position.
What were you doing from a compliance angle? Like usually when you think about those types of payday lenders, like compliance was probably not the thing they were investing their money in. It was trying to buy debt for pennies on the dollar. Usually, what were some of the regulatory, you mentioned regulations. What were some of the regulatory compliance things do you remember dealing with back at that time?
Yeah, so actually, I first started out with consumer compliance. So everything from just all the consumer protection. I was there when CFPB got its start. So I literally was the lucky recipient of one of their first on-site 12-week examinations. A horrible experience. So we can table that one for another time. Then I moved into AML. That's where I started learning everything about anti-money laundering, found my niche there. And still go back to my roots of consumer compliance, but I fell in love with AML in that position.
I would love to know, like, when did you touch on crypto? Because you have, a pretty diverse career when it comes to crypto companies and risk management. Some you didn't name on your LinkedIn. I would love to know, like, what was your first entrance into crypto, blockchain technology? Do you remember where and when you heard it for the first time?
100%. It still sticks out to me till this day. So I was recruited to a consulting firm. So left Advance America, went into the crazy world of consulting. And it was there where a colleague introduced me to crypto. She literally asked if I was interested in helping to conduct an independent review for one of the top exchanges still to this day. And it's like, sure, what's crypto? She's like, go do some research, figure it out, come back, and I will shadow you. You can shadow me, learn everything you need to, and I will teach you. I'm like, deal. It's like, still from that point, just fell in love with everything that there was to offer about crypto, blockchain compliance. She was a great mentor for me. And so I think that's where, from that point, I've also tried to use my experiences to help other people interested in getting into the space.
Was there a concept you were struggling with? I can't even remember. Like when I first heard it, I was coming from the fintech lens. It was funny.
Yeah.
This was the first podcast that I'm hosting now. I listened to almost 10 years ago. And they were talking when I was like, hey, like, let me find the fintech podcast. And they mentioned Bitcoin for the first time. I was like, that's something I've never even, imagine hearing something you've never ever heard about and having really intelligent people talk about it. You're like, hold on, why is this not being conversed around, the hundreds of people I see every week? I still had the understanding that like no one's going to actually use this or need this, especially I live in North America, as do you. What was like a concept that was hard or a struggle for you to understand or comprehend, or what made the most sense when you heard about blockchain and cryptocurrency?
Yeah, so this is literally back in 2015. So, people tell me I'm an OG. I think you're just saying I'm old, whatever, been around for quite a bit. For me at the time, it was really trying to grasp the differences of the different tokens and just the operational background to how do you get to where you are with it. And so for me, I was really trying just to put everything together so I could understand not just the compliance side, but the operational side of it. And that's where you get into a lot of technical nuances that took a little time for me to figure that out.
I love it. What were some of the risks, the financial crime that you were seeing in those early days working from the crypto platforms? Was it still like ICO scams, or did you see some real typologies, probably around darknet markets is what we saw a lot early on? What were some of the financial crime typologies you were seeing?
Yeah, so it was unfortunately more around the darknet markets, a lot regarding child exploitation. So a lot of dark things on that side. And that's really when it opened my eyes to how bad the industry could be if the criminals were having their way with the technology. And so really trying to focus on how do you find and what do you do with these technologies? So how can you create rules and alerts and how can you report? So that's where that really opened my eyes. So what you could see in the market. It was different from early days in Advanced America. You had structuring, you had romance scams. They're totally different typologies than some of these new things happening on the web, or excuse me, on the dark web.
And yeah, dark web was always very interesting to me. It was like heavily used, especially with those early transactions, before the chain analysis and elliptics of the world caught up to it. And then you can see how many people were actually interacting with it at the time. You're now part of, a group working on working groups when it comes to compliance with the Blockchain Association. Now, there's so many different blockchain associations. It would be really great to explain which I feel like this is the OG Blockchain Association, but don't quote me on that. What is the Blockchain Association, and like what are your main, mandates, especially in the working group that you're contributing to?
Yeah, so I've had the privilege to work with the Blockchain Association out of DC since about 2018. So when I was a compliance officer in an interim role for eToro, that's when I first became aware of Kristen Smith and what she was doing with that association. It was fantastic because they were trying to bring education. They were trying to bring thoughtful legislation and bring the industry together with government, right? And so it was just very fascinating. And so I really started trying to be involved from that initial perspective. And then kind of fast forward, I just recently became the co-chair of the compliance working group, which is amazing because you get to work with so many smart people in the space and get early look at what's happening from a legislative perspective. I mean, how do you incorporate new legislation into your compliance program and your risk controls? So just adds a whole new perspective to compliance.
What are your thoughts about the current state of digital assets in the US? Trump's kind of putting his, foot on the gas. We're seeing stablecoin regulations, multiple stablecoin regulations pop up. We're seeing a lot of people visiting DC all of a sudden. What are your thoughts on what's happening, both from like an industry standard and maybe even from a compliance angle?
Yeah, I mean, there's definitely not a shortage of things happening, right? So I've done many webinars just this year on trying to stay on top of what's happening from a legislative perspective, also from just the banking side and the banking expectations. And so it's very interesting to see from last year under the Biden administration to this year with the Trump administration. And one of the things that really stands out to me is trying to turn away from the enforcement regulation perspective and actually trying to get some thoughtful legislation. Because I've had the privilege to work with so many great companies, and part of where they're handicapped is really just they're wanting to be compliant, but they don't know what the rules are to comply. And so that's been hard for some of them.
And they don't want to go through a 3 to 4 legal battle and, hundreds of thousands of dollars to figure out which side they're going to be on at the end of that debate. I'm curious. I just saw recently that, the Department of Justice disbanded their national crypto enforcement team, to your point, which is like kind of criticized for its regulation and prosecution on investigations into like Tornado Cash and Binance and other exchanges. What's your opinion on things like this, where there are some benefits to these enforcement teams, but because of maybe the last regime, they may have overstepped their bounds when it came to regulation. How are we going to draw back without drawing too far back the other way?
And that's where I really think that you have to have the balance between your regulation and enforcement. And hopefully what you'll see is you less of the just enforcement trying to make an example and steering some of the need for the regulation under the appropriate, maybe other groups or other departments. So I know they just disbanded the one that you mentioned. The intent, again, I think time will tell if that will hold true. Will there be more of the enforcement or oversight by the cyber crimes sector, if you will? So I don't know. It'll be very interesting to see, but definitely what the industry really needs is the balance between the two.
What are some of the things that are top of mind to your clients? You don't have to mention who they are, but I'm assuming a lot of them, especially in the US, are talking to you about stablecoin regulation or, even maybe MiCA and regulations that impact other jurisdictions that they might be globally involved with, or even things like the travel rule where we have a little bit of an interoperability issue. What are some of the things that are top of mind for your clients when they're kind of calling you?
So the one is most definitely just how to stay on top of all the legislative changes. So the federal and then also the state layer also. So those that you may need state level licensing, how to stay on top of all those changes, how will that intersect with any type of maybe new federal requirements as well. So that has a lot of people very concerned. Also just the banking, that has been an issue for quite some time. You and I, lived through, Haiti lending back in the day. So Operation Choke Point 1.0, and now what's perceived as, 2.0, at least in the prior years. So trying to free up some opportunity for banking in the space. But otherwise, you hit on a couple of other key topics too, which is, stablecoins. Everyone is looking for opportunity with stablecoins. Is that a good driver for the industry, and where will that take things? Does it have, impact with your government coins, issued like by China and others. So there's a lot, but it just really depends on the business model of those clients. Depends on what they're asking.
Yeah, stable coins, you have to think 2/3, I believe, of every crypto transaction is, stable coins. We're seeing more use cases. I'm in Canada, whether you wanted to donate to Ukraine or, donate to the truck, the truck convoy that we had here in Canada, you probably had to use stable coins because GoFundMe wouldn't allow you to make those kind of transactions without heavy scrutiny from the government. I'm curious, you mentioned you kind of brought up CBDCs, which are central bank digital currencies. What are your thoughts? Do you think this, the government should leave this to the private sector, like Tether and Circle, or do you think they should be also issuing their own digital assets?
So my personal thoughts is leave it to the private sector. I think you'll see an interesting take depending on the country also. I don't see China putting the brakes on, if you will. The US, I think, has started putting the brakes on, any discussions there. So it'll be interesting to see what other countries do in the space. But for the US, I think you'll see, a slowdown in discussions and topics there. It'll be more towards the private side.
And, it's funny that you said leaving it to the private sector. I think it was Dante Desparte or Jeremy there at Circle that kind of said, like, you don't want the governments building the airplanes. You want the governments putting in regulations about how the airplanes should be built and operated. And that kind of hit home. It's like, yeah, I may not want the government to be building the airplane, but I definitely want them regulating the space.
Exactly.
You've been in crypto for over 10 years or approximately 10 years. You've worked with many licensed crypto platforms. Where do you think the regulators should be focusing their attention, especially because as you say, you come from like a consumer protection background? Where should regulators be focusing their attention? Is it things like siloed funds, like what we saw with FTX? Is it things like offering certain amount of yield? We saw that go downhill with things like Celsius. Where do you think they should be? Or is it like financial crime, compliance, and ransomware or national security? Where should they be focusing their attention, as there's so many balls in the air when you start thinking about digital assets and crypto?
There are so many, and really it's the general theme of clarity, among the different regulations. And so you touched on earlier, you mentioned the travel rule. So that's just to me one example, because it's not easy and neat to be able to comply with the travel rule if you are a crypto-based company, right? And so there's nuances there, but you don't have a lot of clarity for these companies that really want to comply, but they don't really know fully how to. So you can also extend that over to other regulatory requirements in the US, whether it's Regulation E and consumer protection. There's a lot that companies really will follow suit. if they have some more clarity on the how to.
You mentioned something there, and I was just thinking about the regulations and where can we go, especially as around compliance officer, the travel rule. Many complaints about Mika have been around smaller crypto exchanges not having the funding to, complete their compliance programs, right? You think about the
Yeah.
travel rule, the TFR rule there in the EU, heavily regulating when it comes to verifying that and other counterparties. What do you think is going to happen in the US? Do you think, compliance might price out some of these smaller exchanges and crypto companies?
I think you will. I think you'll see some consolidation. Because despite what the industry and the news indicates, I do see there being more clarity on the regulations, whether it's more or just maybe rules or again, some type of you know, memo, if you will, about how to comply with it. But we'll get some clarity. But what I think is the concern too, it's from some of these companies that are very small. How do you actually have the resources, especially aside from the regulations perspective? You have these non-mandatory requirements from banking partners as well that want to treat these fintech companies or these crypto companies as if they are a banking financial institution. And so I think there's a general disconnect in the industry between fintechs, especially crypto fintechs, and just the traditional financial institutions.
You raise a great point. Banking relationships, as we both know, have always been, one of the holy grails in crypto. You can have as many customers, but if you can't find a way to process their payments or on and offboard them, you're pretty much out of business. Have you seen the banking relationships get better in the last 10 years? Especially now banks and, we have BaaS now, banking as a service, where banks are working along with fintechs and sometimes even crypto companies and other intermediaries. Have you seen that banking relationship get better? Or are we still seeing a lot of de-risking or, just higher requirements? They always joke that banks are the de facto regulators because it doesn't matter what the regulators say. If you can't meet your bank's requirements, you don't have a bank account to operate. What are your thoughts on the evolution of banking relationships with crypto companies?
Yeah, so I think in the past 2 years, it's went from better to worse, and now I
Oh,
think you're starting to see maybe a little bit of upside. And just to give a few examples of that, the banking crisis really hit, and that's when you saw a lot of de-risking with crypto companies. We saw it firsthand with many of our clients. You'd be given a 2-week notice that your bank account will be closed. That's very difficult for these companies that have many thousands of accounts and their clients have no way to offboard. And so it creates a real problem in the industry. I started seeing some more kind of opening up to how do we successfully, and from a risk-based perspective, bank crypto. And so there are still a few really good banks out there that are willing to bank crypto. Unfortunately, there's still a lot of hesitation about crypto startups. You basically get the funding and just a lot of can you jump through all the hoops, which again, it takes a lot of time and effort and funds to be able to jump through all those compliance hoops.
As someone that works and enjoys working with startups in the crypto space, and for listeners of this podcast who are usually in payment tech, crypto, many of them are startup founders. Any words of advice or anything that they should be thinking about as they're approaching the US? They see, the gates open up, but there's always some
Yeah.
hesitancy about, what is actually behind them, those gates once you get into the country and start the process. What are some, high level advice or suggestions or things that they should look out for if they're looking to, bring their startup operations to the US?
Yeah. So I'll say first, it's about ensuring that you do have great legal counsel. So understanding your business model. Do you need money transmitter licensing, for example? Are there banks that are still willing and open to banking as a service? Or, what are your specific requirements so that you can have those in place or you could be working towards those as you're looking to get a bank partner so they can see that you're serious, you actually know what the regulatory requirements are and start looking at the best way to manage that. Whether it's your transaction monitoring, blockchain analytics, make sure that you have your full story at the very beginning. And so we oftentimes are asked to help create business plans, for example. We can help with a shell of that, but the best person to be able to create the business plan and present that to a bank, it's the ones that are involved day to day. It's the CEO that can tell the story and really convince the bank that they have the controls and have the people to be able to ensure success.
What are the banks most worried about, do you think? We saw with a couple issues with BAS compliance, the bank accounts weren't, there was confusion around whether the money was in the bank accounts or who owns the bank accounts, whether it's a fintech or the bank's responsible kind of for those accounts. Is there any concerns that, you hear over and over, or, choke points where they're like, hey, you need to provide us this, or they dive down on a specific thing that's, made it really challenging to get and maintain banking relationships in the US?
Yeah, and hopefully this will get better with some of the guidance from like the FDIC and the OCC. You saying to manage banking accounts appropriately, or do not be afraid to bank crypto, for example. But some of the concerns have been, what is the bank's obligations for understanding their client and their client's client? So how far do they need to drill down, whether it's on the onboarding process or the transaction monitoring? And so there have been concerns because there's been several of our clients that have heard very directly from an examiner that they must be able to have the blockchain analytics in-house at their financial institution. They can't rely on the fintech or the crypto to do it. And so that's concerning because many of the banks, they just do not have the resources or the education to be able to do that themselves.
That was going to be my next question, actually. Like, with traditional institutions now getting into digital assets, we see
Yes.
Bitcoin ETFs,
Oh,
we're seeing payment companies acquire stablecoin companies. Do you feel that the everyday compliance officer has to upskill when it comes to crypto? Is there a point that we can, not afford to be upskilling and continue to get educated on crypto, especially if you're in compliance?
yeah, I think it's a must-have because for me, it's not real crypto stay around anymore. It's mainstream now, right? It's here to stay, and so traditional financial institutions have to get comfortable with that. They need to determine what their comfort level is, what their ability to bank crypto, whether it's direct or if it's hands off where you have an indirect relationship. But right now, there is still a disconnect with traditional financial institutions from the board down to your upfront in-person tellers, if you will, that they don't understand what the risks are. And so there's still a huge gap in being able to educate, even if it's not on the blockchain analytics, but how do you know your VASP? What are the risks of maybe onboarding of Binance versus eToro versus Kraken? They're different.
Very, very different. I think many people are probably giggling, like, very, very
All the reasons are
different.
very different. Yeah.
Yeah, very different. You're now with Bates Group, and before we jump into exactly what you do at Bates Group, which is grow the business and as well as managing director, I saw on the website that you had a big subject matter expertise around data and data analysis. That seems to be like a huge word at the Chainalysis conference in New York. Everyone was talking about data, whether it was blockchain data, whether it was data within their internal systems and operations. Can you talk to me a little bit? Maybe that's not your expertise area, but like, how much is data being brought up in conversations that you're privy to?
Yeah. So no, I think it's being brought up, especially for the past year more than ever. And I think a lot of that has to do with more push from like regulators, New York, for example. They have an expectation that you know the data, that you fully understand what it is and how it's being used. We've started to see more and more state examiners from the state money transmitter level ask questions, poke holes. And they expect the compliance officer to be able to speak to it, not just we have this person on the tech team and we can bring them in to speak to it, but we have no clue. That's no longer acceptable. And so for us, we're trying to educate our clients that just because you have a compliance handle doesn't mean that you can pretend to be dumb when it comes to the numbers.
That's super interesting. And yeah, like it's the compliance folks at the tippity top and close to the executive level is the one that's telling me like data is important, especially when it comes to automation, and bad data in is bad data out. So
Yeah.
it impacts the whole workflow for most of these teams. Maybe you could go in and explain some of your core services. What's like Bates Group known for? If you ask anyone on the street, what's the one thing that I think Bates Group is known for, or that your organization really thrives in?
Yeah, so it's very interesting that you asked that because Base Group has been around for over 40 years with a legacy model of handling expert witness testimony, large data analytics, and so forth. And then the newer side is hello, welcome to fintech and banking, and we have another team that does a lot with broker dealers and RIAs. And so I would say data analytics is something that Base Group is very much known for, but also outsource compliance. And so that's where my fund comes into play, where I get to, have these, interim compliance officer roles and working, embedded with these companies as if I'm an employee, but still having the benefit of, being a consultant.
You've worked with some of the top crypto firms and crypto exchanges. What do you think is top of mind when you go into a company right now? What is top of mind for you? Like, what are the first 2 or 3 things that you would do if a startup's like, hey, we need to bring you in internally right now? What are the first 3 things that you're doing?
So first, I want to understand what the risk profile is, what the risk tolerance, to see if those match up, to see if I'm a good fit. As you know, my background, right? I'm not risk averse. I've been in very high risk industry sectors for quite some time, but also just understanding, if there's a match there. Do you want to balance risk? Compliance shouldn't be a no department. It should be able to facilitate the business in a very thoughtful way. So that's my first opportunity, is seeing where the risk is, and then just really trying to do a gap analysis and assess where the problems are. And I'm brought in, I'm told, as a fixer. So that's where the fun begins.
I love that. And it's funny because I used to do some recruitment for senior level professionals, and there was 2 camps. One from like the more traditional side, like give me the cushy corner office and let me just do the traditional stuff. And there are people that are like, give me the bonfire and let me come in with the gas can and a whole bunch of water. We're gonna have to blow some stuff up, but we'll eventually put it out. And I feel like, you come from a fixing background. You worked with eToro. eToro, I think, most notably known for being one of the few companies to get a bit license in New York. Maybe talk about the bit license. Nobody talks about it as much more. They say it should be a little bit more lenient than maybe when you started with eToro. What are your thoughts about the bit license, and will we see a revised version in the future, or we think we're going to see very much similar to the same as what we see now?
Yep. So unfortunately, I don't think we're going to see a revised version. If anything, I think we're seeing repeats in other states like California. Illinois has something similar that's being proposed now. So I think we'll see more of the same. If anything, I think New York may, just turn up the requirements on the examination side of it, maybe not necessarily on the application side.
Right.
And so, for me, while it was a very lengthy process going through the bit license, your application questions and due diligence and so forth, it wasn't as horrible as I thought it would be based upon feedback. And the reason that I say that is that New York definitely has high standards, but if you come prepared and you have the right answers, you really want to see it through, then I think it's a different experience as opposed to maybe those who are not well prepared.
Would you suggest companies starting in New York, where it's extremely hard, making it easier for them to get licensed in the other states? Or do you think they should at least tread water a little bit before they go into, before they pass the tidal wave of what would be the New York licensing process?
Yeah, we never suggest New York first because it's just a very long process. And most companies that are in that phase, they're wanting to get operational as soon as possible. And
Right.
so we do suggest going for some of the easier states first. That also allows some of those state regulators to start looking. And they're like, oh, well, you've already been approved in this number of states. We know Texas is a hard state. You have a license there. So maybe we can, leverage some of that work. And so we have seen that as, a key opportunity to take it slow and put New York towards the end.
You talked a little bit about risk appetites. I've been close enough to some risk assessments. How easy is it, especially for some of these mature crypto exchanges that you might be consulting for? How easy is it to do a risk assessment? Because once again, data, like they might have that 100,000 accounts, but the majority are dormant. Like how easy is it to get a good assessment of risk when you're dealing with a crypto exchange versus a bank? A bank where it takes a lot longer to set up your bank account usually, versus a crypto exchange where you can feed an email address and at least get started on a couple $100 of crypto right off the bat.
Yeah, so I think that it very much depends upon the business model. If there's been one from the very beginning that you can build from, or if you're jumping in, there hasn't been anything, you're operational for quite some time. The good thing is that most people have a good working base of the FFICs, guidelines. You kind of always use those as a standard. But the problem comes where you have so many different nuanced risk areas that you need to incorporate into a crypto risk assessment versus even like a traditional money services business. And so there are unique differences. And that's where, part of that education gap comes in. If you've always been in traditional finance, then you don't necessarily understand the risks related to you adding a new token listing, right? And what you need to consider for that type of risk.
Have you seen some of that? I think in crypto is very notable about policies and procedures. People might be taking templated procedures from, the traditional lens, adding in a little clause about cryptocurrency, and then trying to pass it off as like a full crypto compliance program. Have you seen that or not so much in the
Technically,
crypto sector?
yes, we have. And just because GPT is there doesn't mean you should use it for your policies and procedures. Maybe, AI bots and things like that. But all kidding aside, the regulators are really stepping up their game as well as big partners and saying, this is a template. It does not actually represent your business. And so what we try to recommend is that you take the time, have a cookie cutter policy, if you will, but the procedures need to actually be what you are doing. Also, because our team is very good at finding procedural violations. So you may have this pretty procedure document that a friend gave you or a friendly competitor, but it doesn't match what you're actually doing. And so companies get tripped up so often because they're not doing what they say they will do, even if it's not a regulatory requirement.
Do you see that more documentation and actual implementation? Because I feel like the policy and procedures are like, finally, we've done this. Yeah. We say we do that, but in practice, they're not doing the EDD on clients. They're not doing, look backs on certain remediation projects. Like, where is the struggle in actually following the policies and procedures?
I mean, the struggle is real. And I would say that where we see that a lot of times is because, someone hire this great consulting firm or law firm to create these policies and procedures, and they have no clue what they say or no clue to, how to actually operationalize it. And that's where they get in trouble. And so it can be very expensive policies and procedures that you paid a lot of money for that now has gotten you in trouble because you don't understand them.
When you're going into some of these startups for the first time, if you find that you're a good match, where's the area that they're missing? Maybe not the area that they're doing wrong, like the policy and procedures. Where's the area that they just don't know about? They don't know what they don't know, and they haven't even thought about that. Whether that's privacy regulations, like GDPR, whether, where's the area that they're like, hey, you're like, do you have this? And they're looking at you like you have 8 eyes. Like, what's that?
That always is consumer compliance. And I mentioned earlier, going back to my roots on the consumer compliance side. And so for me, that's just a natural thing I'll look for. But most of these startup companies, whether it's crypto, fintech, MSB, they look at you like you have two heads. If you mentioned, do you have a customer complaints policy, or do you know what Reg E or UDAP or any of these consumer compliance regulations are? They're like, it's not applicable. I'm like, it is. And so we have to start from the very beginning.
Can you give us a high level of like what these consumer compliance regulations like require? Like you said, the complaints, which is interesting because that would be the first thing that comes to mind, usually when the market's hot, right? But when the market goes down, I find that consumers don't blame themselves. They blame the advertisers, they blame the crypto shit, they blame everybody else, which would fall under, the guise of your clients. I'm assuming that they're coming back and complaining to them that they weren't warned enough or there wasn't enough prompts. Where's the areas, like, can you give us a high level of what this consumer compliance looks like?
Yeah. So, consumer complaints is the big one, right? And so it doesn't necessarily have to be that there's a problem or that, eToro or whomever was bad. It could be that my account was hacked and now it's not my problem, it's yours. You're ignoring me. Things of that nature, right? So that's kind of the easy one. You do have the privacy concerns as well. So in the US, you have GLBA, but you have also various different state regulators that have their own privacy requirements. And so that's kind of forgotten or overlooked by many. You can also consider, UDAP. So anything from an advertising or marketing perspective, is it unfair, deceptive to the clients? Are you giving the impression that you buy crypto and all your problems will go away? You're going to make a lot of money, retire tomorrow. Things like that. So those would be the big ones. You can also get into just various different consumer disclosures for like customer receipts. So should you be sending customer receipts? Do they need to be compliant with regulation E, depending upon, again, the business model? So you can go into all kinds of boring requirements on the consumer compliance side. And I think that's probably why people want to forget about them, because it's not the exciting, AML and stuff like that.
Yeah, it's not the look at who we caught. It's like look at all the things we did for our customer.
Who are glazing over is they're bored of tears.
We talked quickly about the evolution of banking relationships with crypto. What have the conversations been like over the last 20 years? How have they changed? I know even up to like maybe 5 years ago, maybe before the pandemic, companies would be like, hey, we just need someone that knows chain analysis. Like, that's what we need for our compliance program. It's like, I think you might need a little bit more than that. You might need to do a job description. It was very, very like Mickey Mouse, Fisher Price, my first compliance program. How has that changed? Are you still educating as much as you are providing your services?
Yes. So to many, we do still educate quite a bit, especially on the startup side, because oftentimes you're as the CEO that has you, as we've been told many times, a dream in my head and a dime in my pocket. But they are the CEO, they are the compliance officer, they are the one and everything. And so we have to really start off you educating from the one, you need legal counsel because we're not legal. But then from beyond that, just from the high level, federal side. Have you registered with FinCEN? Are you a money services business? So we can get you an AML program or get you registered to file suspicious activity reports. So all that very basic initial program and policies and procedure building training, we still see quite a bit of gaps there. And then even more so when it comes to terms that someone needs to be licensed as a state money transmitter. So that just, turns the world upside down.
And then they have to do that in every state. What are your thoughts about state regulation versus federal regulation? We produce podcasts with Chainalysis. Leslie Chapkin from Paxos came on talking about, the possibility of like a federal stablecoin regulator, like similar maybe to what Barra has in the Dubai with their virtual asset regulator authority. What are your thoughts about state versus federal? And does this leave, crypto kind of in the same gray area that cannabis is in, where it's legal in some states? Like, I believe it's federally criminal. I could be wrong for how much, marijuana smoke I smelled in New York when I was there 2 weeks ago. So maybe just educate us a little bit about the nuances between state regulation and federal regulation when it comes to crypto.
Yeah, so I don't foresee there ever being just one federal legislation. I've had this conversation with a lot of really great, smart people from just even like Blockchain Association, various different attorneys. No one will ever believe that there's going to be one federal oversight at all. With that being said, can there be some more synergies between either the states or what is needed from a federal perspective? Possibly. The most difficult part is not from FinCEN or a federal money services business perspective. That's pretty easy in the grand scheme of things. The nuance and the difficulties come when you have 50 different state regulators, and depending upon your business model, you may need 40 something different licenses, 40 something different regulators, different expectations, different requirements. And so navigating that process is extremely difficult. And so that's why it's also very costly to get started and time consuming. So the regulators have tried to come together to have some streamlined processes where you can go through one application, get licensed in many different states. There's still a lot of pulls with that. And so it's still not perfect by no means. So that's just some of the issues there.
And is marijuana legal in New York, or like should we have been doing some citizens arrests while we were there? What's the deal with New York?
So I don't know about New York specifically, but you are correct in that many states have legalized it. But the problem is that from a federal perspective, you can't bank it. And so those companies in the cannabis space, they're required to look for state charter banks or credit unions, or those that can take the funds without it going through a federal banking system.
I see. So speaking of banks, banking as a service has been hot. They went through a little bit of a tumultuous time. I'm curious, what are your thoughts, or what are the warnings that banks, fintechs, and startups, and crypto companies, all that are in your purview of services that you've dealt with over the last 10 years, what are some things that they should be cautious about before entering into these vast relationships?
Yeah. So, there's so much difficulty there that I think you're starting to see some good headwind, meaning that banks are starting to realize that they do have a very important part of the role, meaning that they have an education piece. What are the requirements for these fintechs coming on board? They have to treat them as if they are a liability in a way, so they have to take it responsibly. And the banks that have been in the space for quite some time, and we work with many of them. One, I'll just kind of throw out Lead Bank is a very good example in the space of them having great controls, and they know how to manage the relationships. For the actual fintech or the crypto side, it's understanding that they do need to have mature programs. They cannot skirt compliance, and that it's a partnership with the bank. So I think both sides are starting to realize that more and more, because the fintech, no longer wants to just check the box or get a very quick bank account. They want one that they know will be there next year. So they're not de-risked. And so you're starting to see them be more willing to go through a longer due diligence process for a very thoughtful and long-lasting bank relationship.
Yeah, bank relationships is something that you need a few of, and they need to be long term.
Redundancy is key, no doubt.
It's like the polygamous relationship of the financial of the financial world. You need a lot, and you need them for a long, long time. I'm curious. There was an AI agent article highlighted there by Bates Group around the use of AI agents, especially in crypto markets, and the impact this has. What are your thoughts? Are any of your customers doing anything interesting with AI? You yourself, maybe?
Yeah, so now I think there's still a vast, array of how companies are using it. So you're getting some that are very interested on the side where you might have a crossover between crypto trading as well as securities and so forth, and trying to use it in the trade process. You're also seeing some companies wanting to utilize it to more so clear rules and alerts. So not just you having a certain number that you kind of go past your fuzzy logic, but then actually having a different thoughtful process of removing some of the human interaction. So I would say those are probably the most frequent use cases that we've seen, or the way you have been asked about how to incorporate good AI governance controls.
I'm curious. You just sparked something into me, especially around the AI conversation. I was thinking about, the crypto and AI czar that we have here or that you have there in the US, David Sachs, who seems like a really intelligent person, by the way. I'm curious, what are your thoughts about pandering to the administration? Like we saw Solana with a very pro US commercial that, maybe have some controversy around it. And then the administration's only lasting for 4 years. So how did these crypto businesses, deal with, Operation Chokehold 2.0, and now hey, we're going to be the most innovative stablecoin crypto company in the world, country in the world with Trump? Like, how do you balance this? And could this shift back if, the Democrats or another party takes over, or another thinker within the same party takes over within 3.5 years? Do your companies come to you with those concerns, or is they just kind of ride the wave as it comes?
No, so they absolutely do. And so that's definitely a concern for many of them, especially the ones that you can tell they want to be a long lasting, thoughtful company, right?
Right.
They don't want to just ride the wave and then you pull the plug and get out, make a lot of money. And so that's where I think there's a shift right now in the mentality and the mindset. And it seems that the hope, if you will, is that this will be a long lasting change where both sides, depending on, no matter if you're a Democrat or Republican side, that both can see the benefit of thoughtful legislation, being able to have innovation in the space, and letting the U.S. be able to take control of being the place where companies want to come to innovate. And then it can foster more ideas and just bring more opportunities to the U.S.
Do you know? I'm curious, and this is not even from a political sense. This term of waste, abuse, and fraud in the U.S. government and the spending. Do you have thoughts about that? How it pertains to maybe the crypto industry? Because the crypto industry has been really not servicing, I don't think, the government as much as maybe other industries like national protection and things like that. Any thoughts around how this crusade to not wastefully spend in the government and things like tariffs are impacting maybe your customers?
Yes, so I don't think there's necessarily a huge impact on just the broad topic there. Where I do see some potential interest or concern is more along the lines of, are there opportunities to showcase blockchain technology in being able to do away with fraud, for example. So you can utilize your blockchain technology for so much more than you sending Bitcoin, right? So that's what will be very interesting to see is, will this allow for more of that to be utilized on the government side? I mean, in the private sector as well. Where we do see some more concern, though, it's just impact with potential tariffs, and is there an impact, generally speaking, to these various different countries, and by default their business, their ability to be profitable and be successful. So I think that's kind of a different concern that's not necessarily directly related to just a crypto business model, but just business in general.
I love it. That's a great answer. What are your thoughts on DeFi? DeFi is not regulated for the most part, but just like crypto wasn't regulated for the most part, there were some early adopters of compliance in the area, to your point of trying to build a long-standing business. Just like when I reach out to this podcast, they're like, hey, it's 2016. There's not regulations yet, but there will be. We've been in payments for decades. There will be regulations. Trust me, they're coming. It's kind of the same conversation I think many are probably having with some of these DeFi platforms. Although they've gotten some big wins in the court system, what are your thoughts? Should DeFi, be programs, protocols should be coming to you right now, just seeing like, hey, what's the minimal amount we can put in to be a little bit more on the safer side than kind of like fully decentralized or fully out there?
Yeah. So, I think that there's definitely a place for DeFi. And I've been involved for quite some time, really back 2018 with Avalanche. And so before their ICO. So this is a space that I truly enjoy being in from both the centralized and the DeFi side. What I find very interesting is the balance of what some of the companies kind of like in Avalanche is really doing in the space to showcase that you can still hold true to some of the DeFi qualities or capabilities, but still have some good controls and best practices in place. And that is what intrigues me so much about them, is that they want to be a leader in showing that you can have that thoughtfulness still on the DeFi side. But I do think that you'll start seeing just more and more best practices, and then you'll see those that don't want the DeFi that is a maybe a more traditional lookalike. They'll move away. I do think there's a place for those for people who want the true ability to be anonymous. But if you want to interact in the US with banking on rails and off rails, then I think you have to understand that there's a certain amount of you need to have KYC, AML, or you'll be the next one with an enforcement action.
Yeah, if you don't need the liquidity of a major exchange and the travel rule being enforced, then
Right.
if you can find your coin somewhere else, maybe you don't need to go the compliance route. I'm curious, you had a cool AI, the AI trend that's going around is everyone's making an action figure. One of the big things I know about you is you fly planes. And, I think you said you ride motorcycles. And do you, as and so many entrepreneurs listening to this space, there's always quirky things that they do. You seem like you do some really old school, cool things. I'm curious, like, tell me about that. And do you think that compliance professionals, founders, entrepreneurs, they should all be taking up a little something that, lets a little steam out?
Yeah, no, for me, it's always been very interesting that I've liked unique, different hobbies. I don't want to just read a book about something. I just want to go do it. I want to experience it. And so I've been a pilot now for about 2.5 years, something
Wow.
I've always wanted to do when I was younger. Finally got the opportunity, and it was the hardest thing I've ever done, like seriously, but the most rewarding as well. So yes, I love flying every chance I get, ride motorcycles, scuba dive, have a martial arts background. So again, not the typical, I sit at a desk, kind of during the day, work boring compliance stuff. So yeah, I need something fun for my hobbies.
I love it. Do you get to like practice any of those things or do any of those things when you're going to conferences? Like maybe if you're going to Thailand, you're like, hey, let me go to a local gym and do some Muay Thai while I'm at it.
The coolest things, I have flown to a couple of conferences. So, being able to just hop in a plane, not go through the commercial airlines, that's been pretty cool.
That is absolutely awesome. You sold your company or got acquired. I'm not sure what the correct term is for what you've done to Bates Group. Give us the entrepreneur view of doing that. We talked before the show. What was that like? A lot of entrepreneurs are like, hey, I'd love to get acquired by a large consultancy that's been in business for 40 years. Talk to me about that process. What were some maybe the hiccups? Did you hire like a business doula or an acquisition doula to kind of walk you through the legal process? Talk to us about the acquisition.
Yeah, so it kind of came out of nowhere. And so I was in a consulting firm for a couple of years when I left being in-house, and then had that crazy moment of, why am I not doing this for myself? And so started my own consulting firm. And it really was a blessing because I had a lot of great connections, a lot of great people to help make referrals, intros to me. So I found that I was growing very fast. And so I quickly had to bring on contractors to help with the work, brought my first employee on. And then it went from myself to 6 full-time employees and 1 part-time that was helping with some administrative work. Bates Group came to me more at the time, just interested in partnerships, referrals, that sort. And then they asked if I'd ever be interested in being acquired. And I was like, well, I haven't thought about it, but maybe. And so I'm like, glad to have a conversation. And so, one conversation led to another. I had just before that, for curiosity, wanted to see what the valuation of my company was. Always, as I mentioned to you, I'm slightly type-based. So I've always, tried to keep, good books, records, all that. I knew that I was very profitable, had great margins, all that good stuff. And Bates, made a great offer to me and wanted to bring over literally myself and all of the employees to start their fintech and banking practice. And so I had been in business for just at 3 years when they brought over everyone from my company. And so
That
here I am.
that
So it's
is
been about 3.5 years now that we've been part of the Bates team.
that is awesome. What were they trading on? You don't hear many service-based businesses being acquired in this way. You hear a lot of SaaS products, maybe a lot of technical products. What are they basing it on? EBITDA? Like, where are they, like your Rolodex, your customer portfolio? Or is it just like straight expertise? And they're like, hey, this is the amount we pay if you stay in house for this amount of years. You don't have to go into details, but I'm just curious,
Yeah,
high level. That
no,
would help a lot
absolutely.
of
Because
help
to your
me.
point,
It helped me. That's 3 years old, and other entrepreneurs, I'm sure too.
yeah, no, because to your point, I don't make things to sell, right? So, what is it that they're actually buying? And so, definitely the expertise. They were able to see year over year growth. So, we had about 60% growth year over year with about 60% gross margins. And so, they're very excited about just how well the business was doing, and also just seeing the type of customers that we have and the long term client relationships, recurring contracts. So that was a very, very much of interest to them too. So it wasn't just one-off projects, but we had recurring revenue. And so that model was very exciting for them to know if they potentially acquired my company, which is Corecom, that they could bring over, a pool of great talent, my team specifically. And they could also bring over those contracts. And so part of the deal was that they were hoping that at least, I think it was like 90% of the clients would come over. 100% came over. So we didn't have anyone that, opted out. So that was very exciting.
And for you, what was, I'm sure a lot of consultancies big, was there any draw that were like, I don't mind working within this ecosystem that they've created? Was there a specific draw, the type of, focus they had on innovation and fintech and banking? Or is it like you knew that you would have the autonomy of like setting up pretty much your own shop within their shop?
Yeah. So at that point, I really knew that I would need to make investments in my business from an infrastructure perspective, more technology. And so when they came to me, I was about to invest in my company. So additional technology, some more people and things like that. And so they already had built out, technology. They had infrastructure that I did not have, an in-house accounting team. I no longer had to wear the HR hat, thank goodness. So they had some, different, offerings that I did not have at that point. And so that's why it was actually very interesting. But for me, it's also the people. I didn't want to be acquired by a company that was it was very transactional. And so it just felt like I'd known these people forever. Very friendly. You could tell that they also operate in the same way that I did, putting the client needs first, not trying to nickel and dime, right?
Right.
Because it's about building the relationships. And so for me, that's kind of what sold me.
I absolutely love a story like that. What was the most challenging thing as an entrepreneur, like building this business? Was it the accounting? Was it dealing with 6 people? People think like, oh, I can't believe this crypto exchange laid off 100 people. When do you know what it's like to manage 1,000 people? I know what it's like to manage 3 people. And I'm very empathetic to a lot of these layoffs to a certain point, because I don't even know how these companies found the money to hire all these people. But B, how do you manage making sure everyone's doing that? How was it for you? Was the people the easy part, the hardest part?
No, people are always the hardest part. Literally, I tell people all the time, like people, that's difficult. And so it was really managing everything from an HR perspective, just being honest. I don't mean necessarily people problems, because I was very grateful that I've never really had people problems, but people just bring needs with them. And so,
Right.
as I mentioned to you, before we started talking, or before we started recording, I wanted to offer health insurance to the employees, a way to give back. That was a nightmare of a process figuring it out, because I'd never done it before. And so I'm trying to do billable work. I was working for various clients at the time, trying to figure out, all these different nuances that I had no clue what I was doing. And so figuring out a lot of that stuff that was just more of a time drain for me, that was what was hard.
Looking back, anything that you're like, I should have done this different, should have done this earlier, should have never done this, maybe the health insurance. Is there anything you look back now and you're like, or like, hey, oh, Bates Group does this a way more, I like the way they approach that. Anything that stands out to you?
So I would say that the best move that I ever made was hiring an accountant. So that by far was the best idea I ever made. I would say, as far as anything that I just regretted or wish I would have done sooner or different, I would say you potentially just invested sooner in more technology, because time is a real thing and you only get so much of it. And so just taking more of a proactive stance to be more efficient, using whether it's like Monday.com or like a Panda Docs or whatever it may be for your company, just taking those moments and really trying to determine the risk reward factor and the cost, because at the end of the day, you can't get the time back. So if you could add some efficiencies, then that can really change your world.
I love it. Thank you for going so deep in this. This is
Yeah.
like, I think obviously we have a lot of entrepreneurs and, payments tech people that listen to this podcast. I think it's helpful to see people that actually, exit or got acquired in a very unique space that's still attached to crypto, which is really, really cool. As we end the session, any new practices that Base Group is getting into, any new areas of expertise that you're like, hey, I wouldn't mind expanding here, maybe into AI times blockchain, or, the convergence of digital assets as it pertains to ETFs. What are your thoughts about anything new for you that you're interested in, or the practice in general?
Yes, so I'll say not totally new, but more so expanding. And that's because, AI, you could say it is new, but as we all know that have been in the space for quite a while, AI machine learning is not really new. Just
Right.
maybe the ways that we're utilizing it is different. And so we are getting more opportunities to have, AI related work, like AI governance, policies, procedures, and so forth. So that's been very exciting, because it's something that, it's kind of a different approach than what we've done before. We've also started doing more on the model system validation and testing side, which is also very exciting, because we do see a big push by regulators, as we were talking earlier, to know your data, know your systems. And so we just see a lot of excitement there.
I love it. Brandi, this has been one of my favorite podcasts. You're an absolute gem. Every answer was short, concise, and to the point, and packed with, knowledge. We really appreciate taking the time to come by the Around the Coin podcast, and we hope to catch you flying around soon.
Thank you so much.